Welcome back to Explain the Charts, your ultimate destination for in-depth market analysis. Today, August 7th, 2025, we're putting the spotlight on the highly liquid and widely traded currency pair, EURUSD. Our goal is to provide you with a comprehensive understanding of its current state, dissecting both the macroeconomic landscape and the intricate details found within its candlestick data. The foreign exchange market is currently abuzz with several key developments that are directly influencing the euro's performance against the US dollar. Recent headlines from various financial news outlets indicate that the US dollar is encountering significant headwinds, struggling to gather substantial strength. One of the primary drivers behind this dollar weakness is the ongoing speculation surrounding the Federal Reserve, particularly rumors about Jerome Waller being considered as Trump's pick for Fed chair. Such an appointment could signal a more dovish stance from the Federal Reserve, which generally translates to a weaker dollar as interest rate hike expectations diminish or cuts become more likely. This dovish Fed narrative is further reinforced by reports of euro to US dollar actively testing critical resistance levels, while broader trade tensions also add a layer of complexity to the market. Looking back just a few days, the euro experienced a notable surge last week, a rally that was largely anticipated by many market participants. This upward momentum was directly correlated with Friday's non-farm payrolls report, which delivered a significant miss on expectations, prompting a strong reaction in the currency markets. As we can observe on the daily chart, particularly around the beginning of August, the impact of the NFP miss on August 1st is clearly visible. The candlestick for August 1st shows a powerful bullish engulfing candle, marking a substantial 1.43% gain, which propelled EURUSD from around 1.142 to 1.158 in a single trading session. This perfectly illustrates how a significant fundamental data release can directly translate into strong price action on the charts, confirming our initial news correlation. However, despite this impressive rally, current market sentiment suggests the euro is now experiencing a pullback. The price action is consolidating within what analysts describe as a tight daily channel, hovering closely around the 1.1650 psychological and technical mark. The 1.1660 to 1.1680 region has been specifically highlighted as a significant resistance zone, and our data confirms this. Thursday's session, which is today, reportedly failed to decisively breach the 1.1706 imbalance, indicating that sellers are defending these higher levels. This tells us that while the overall trend might still be upwards due to underlying dollar weakness, immediate price action faces strong overhead supply. Let's zoom out to the entire daily chart to gain a broader perspective on the long-term trends and identify major support and resistance areas. Over the past year, from late 2024 through the first half of 2025, EURUSD has generally exhibited an underlying uptrend, characterized by a series of higher lows and, periodically, higher highs. A robust support foundation appears to have formed around the 1.05 to 1.06 price region during the months of November and December 2024, serving as a crucial demand zone. The strong bullish leg witnessed in early April 2025, where the pair surged from approximately 1.07 to nearly 1.147, was a clear indication of significant buying interest. Although the market then entered a period of consolidation and minor pullbacks, the price largely managed to hold above previously established resistance levels, effectively transforming them into new support zones. A critical point to note is the sharp and pronounced decline observed in late July 2025, where EURUSD plummeted from highs around 1.17 down into the 1.14 range within just a few trading sessions. This dramatic move clearly signaled a short-term bearish reversal on the daily timeframe, catching many market participants off guard and suggesting underlying weakness or profit-taking after extended rallies. However, the powerful bounce on August 1st, driven by the NFP data, effectively mitigated some of that bearish pressure, pushing prices back towards and above the 1.158 level. The current resistance at 1.1660 to 1.1680 is a major hurdle, acting as a ceiling that the market has yet to confidently break through for sustained upside. Looking ahead, the long-term bullish outlook for EURUSD remains contingent on its ability to maintain price action above the 1.1585 invalidation level, as cited by recent market analysis. Should this support hold firm on a daily closing basis, the next targets for bullish continuation would be the 1.1706 and then 1.1736 imbalances, indicating further potential for euro strength. Moving to the 1-hour chart, it's important to clarify that this data range provides historical context for intraday movements prior to the significant late July decline and recent August rally. Specifically, from July 18th to July 23rd, we can observe EURUSD oscillating within a defined range, primarily between approximately 1.162 and 1.175. The price repeatedly encountered resistance around 1.166 to 1.167 on July 18th, and again on July 21st and 22nd, showcasing persistent selling pressure at these levels. We also see some strong hourly bullish candles on July 21st and 22nd, indicating attempts by buyers to push higher. However, these attempts were met with strong rejection near the 1.175 mark, which then served as a robust upper ceiling. This timeframe highlights the importance of recognizing how prior resistance levels can continue to influence future price action, even across different market cycles. Now, for the most immediate and granular insights, let's turn to the 15-minute chart, focusing on the price action from August 5th through the close of August 6th. This timeframe clearly displays the initial consolidation around the 1.157 to 1.158 area during early August 5th. Then, we witnessed a decisive upward shift, with price pushing strongly from approximately 1.154 in the midday session on August 5th, ultimately reaching current levels around 1.166 by the end of August 6th. This recent surge confirms the short-term bullish momentum that brought the price back to these critical resistance levels. However, in line with the news reports, the market is indeed showing signs of a slight pullback within this tight channel. The 1.166 level, which corresponds to the last complete candle's closing price, is visibly acting as immediate short-term resistance. Looking for intraday support, the zones around 1.156 to 1.158 stand out, correlating well with the daily chart's significant reclamation points. The volume during these recent bullish pushes on the 15-minute chart appears relatively healthy, suggesting genuine buying interest, but sustained breaks above current resistance will require even stronger conviction. So, given all this information, what's the verdict? Are we bullish or bearish on EURUSD, and at what points should we consider our bias to shift? For a strong short-term bullish outlook, the immediate hurdle is a decisive break and sustained close above the 1.1660 to 1.1680 resistance zone. Should EURUSD manage to clear the ceiling with conviction and healthy volume, a move towards the 1.1706 and then 1.1736 imbalances becomes highly probable. The ongoing narrative of potential Fed dovishness acts as a fundamental tailwind for the euro, making a weaker dollar scenario more likely and thus favoring EURUSD upside. In the long term, if the pair successfully reclaims and consolidates above 1.1736, it could open the door to challenging higher historical price levels, potentially signaling a renewed broader uptrend. Conversely, a short-term bearish bias would strengthen significantly if EURUSD fails to overcome the 1.1680 resistance and begins to consistently trade and close below the 1.1650 level. The crucial invalidation point for the current bullish momentum is 1.1585. A convincing daily close below this level would be a strong signal of a potential euro top forming and a possible dollar bottom. Such a breakdown would make short positions much more appealing, as the pair could then retest the 1.1520 and possibly even the 1.1450 support zones. For long-term bearishness, a definitive break below the established 1.1450 support would be necessary, potentially leading to a reevaluation of the entire uptrend from late 2024 and a retest of the 1.05 to 1.06 region. Always consider the broader market context. For instance, the recent decrease in the US dollar's value against the euro over the past week, as reported by Wise, provides a macro-level backdrop to these movements. To recap our in-depth analysis for EURUSD on August 7, 2025, here are the crucial price levels and conditions to meticulously monitor. The immediate, formidable resistance zone lies between 1.1660 and 1.1680. A decisive breach above this, particularly with an increase in trading volume, suggests a high likelihood, approximately 70%, of the pair advancing towards the 1.1706 and 1.1736 imbalances. However, if the price struggles and respects this resistance, short-term selling pressure might prevail, leading to a consolidation or minor pullback. On the downside, the absolute critical support for maintaining the current bullish bias is the 1.1585 level. A sustained daily close below 1.1585 would increase the probability, perhaps to 60%, of signaling a short-term euro top, potentially opening the door for a retest of the 1.1520 and even 1.1450 support levels. Beyond these technical levels, traders must continuously monitor upcoming U.S. economic data with a keen focus on inflation figures, employment reports, and any further statements or appointments from the Federal Reserve. These fundamental drivers have the power to override technical patterns and instigate significant shifts in market direction. Furthermore, always remember to confirm any potential trend reversals or continuations with supporting evidence such as volume analysis, candlestick patterns, and confirmation across multiple timeframes before executing your trades. Understanding these dynamics will be paramount for informed decision-making in the EURUSD market. That concludes our detailed analysis for today. Stay vigilant, stay informed, and always trade responsibly.